What is going on, FUD Nation, and welcome back. We have an amazing episode. We have Mike from Bloomberg back again, and he's going to share with you a deep well of expertise. He's got some shocking predictions coming up for you. You really need to watch this episode. Right now, we are at a very precarious place in the market cycle for Bitcoin, and you need to know what Mike is about to tell you. So strap in, get ready. We have an amazing episode with Mike McGlone from Bloomberg. Welcome back to the show. None other than Mike McGlone over there at Bloomberg HQ. How you doing, Mike?
Hello, Elio. It's good to see you again.
Well, thank you so much for coming back on the show. If you guys haven't seen, Mike and I have done 2 episodes previously, and they were actually very popular. I think you guys should check them out. We'll link them at the end of this video. But just in case they missed that, could you give us a brief background on who you are, what you do, and how you came into the space, Mike?
Well, I'm a senior commodity and crypto strategist at Bloomberg. I should say that term lightly, senior, because you can see I got a lot of hair left, so I don't want to focus on that too much. But so that's my main focus, commodities and cryptos. And my main purpose here in Bloomberg Intelligence is a strategist. This is where the market's going and why. And if I'm wrong, got someone to blame. So as we talked about earlier, I'm very data-driven, and I've sit on this wonderful machine that's just got tons of data. And my goal is to put some adult supervision to the space to see where it's going. My background is I started in the Chicago trading pits, bond trade options and things and commodities in the 80s. Been in New York since 93. And I really got involved with Bitcoin starting in 2013 when I was the head of research at an ETF firm that did only, called ETF Securities. They're now part of Aberdeen, that did only precious metals. So my focus has always been from precious metals.
So I guess you've got a long history in commodities, precious metals, and now Bitcoin. What did you think of Bitcoin when you first got into the space, and how at all, if at all, has your perspective shifted?
I'm very intrigued. I'm one of those teams, I just love new technology, but I'm always suspect of how good the use case is going to be. So I'm just addicted. Like I've got solar panels in the house, electric car, all that stuff, but only because it's cost effective. And that's my rules. I always have to be rational about it. So, but the key thing for me was this is the rally 2013. I'd never thought it'd go past the price of gold, and when it peaked at the price of gold, I was like, it's done. Got down to 200, and it's done. And that was the key signal to me back in 2017. It was on April. Once it broke above the price of gold, that's when we pointed out this thing's going, and that was a parabolic rally. That now I think we're still in the process of taking back. And I believe in it in the big picture. I'd say in the last 2 years, I've become much more of a Bitcoin maximalist. I don't like to use that term, but I really believe that whole concept of Bitcoin being digital gold, I just think it's still too expensive.
So when you say that it's the price of gold, you're talking about per unit, correct? You're talking about one Bitcoin being 1 bar of gold, or 1 ounce of gold, rather.
Per ounce of gold, yeah. So it's the standard nomenclature sometimes in markets. It's just the unit that people use to measure, and it's also sometimes psychological. But the per ounce price of gold is in dollars is the world's standard measure, and the per dollar price of Bitcoin is the world's standard measure. So we'll use those.
But I would push back a bit and say, aren't we really trying to match the market cap to gold? Wouldn't that really be the price of gold if we were actually having the same amount of capital in this market as the other market? Because the unit could have been set at a totally different, the unit is artificial. The divisions of Bitcoin to the whole of the market.
Maybe someday. It's kind of big picture for me, which I can get my arms around. But I've heard those arguments. I dismiss them rapidly, partly because I look at gold as one of 118 elements, and it's the only most unique element in the history of the world and always will be. And then I look at Bitcoin. Yeah, great. It's the first one I get it, but it's one of 2,000 cryptocurrencies. Maybe only 30 that matter. But it's so new, and I just can't. It's so new. I can't get that far and big into it. But to be a currency, that would make sense. But it's not a currency. I mean, it's more like gold. Maybe market cap, but just not the. I prefer to hear your assessments on that. And that I like to listen to. I just kind of don't go there.
Yeah, I know we're getting you out of your wheelhouse here, which is the numbers. But at the same time, I do find it refreshing to hear where your head's at, and of course, I think as far as a currency and understanding what will occupy the store of value, the store of wealth in this new digital environment, and currency, I think there is some argument to having the focus of wealth building being in one sort of area, and that way, what is something of value, but the fact that everyone agrees that it's valuable, and the more that we agree on one coin being that, I certainly understand how that could lead to a much more swift and I guess far-reaching adoption. So I guess that's kind of a good segue into what are you looking at right now for the March outlook, March of 2019. How are you seeing the Bitcoin and cryptocurrency markets ebb and flow?
Well, your timing is perfect. Come Monday morning, this is Friday when we're taping, we'll be publishing our outlook for March. I'm a little bit late because I was actually at an agriculture conference, which was good. It was pretty cold in Covington, Indiana. But so my outlook is it's not much different than last time, but I'm much more worried this time that we're getting close to what I see we had in November. There's still a lot of false hope. All my indicators still point down. And three of my key indicators still point lower. And one of the key ones is shorts. The amount of shorts in the market in Bitcoin, the way we measure it, which is subject, trying to measure it the best way I can, is dropped to the lowest level since just before that collapse in November. And that's the key thing. When you have a bear market, a high level of shorts is a bid below the market.
Mm-hmm.
But shorts really drop means you don't have short covering fuel. So I'm starting to worry about the market's ready to make its next move lower, and I view my indicators show around 2,400. And that's not perfect, but if you just look at things like transactions and volumes and things, that's then my next level. I'm not trying to pin that exactly, but it's just what it shows.
Yeah, I've actually noticed, and before we dive into your analyses, I've absolutely noticed that over the last few weeks, I've seen so much optimism in the space, and it's always good to see optimism. There's perpetual optimism in Bitcoin, and I think even in the depths of even if we go to a quarter of the price we're at right now, we'll still see a ton of optimism, which is why I believe in the space long term, is because you have a community of people who will believe in this no matter what, because there's an ideological backbone here. But at the same time, I also have seen some experts, yourself included, my friend Eric Crown, who's come on the show, and everyone who's doing this, what I consider at a professional level, is looking at the charts a little differently, saying, what we're seeing here is a move downward. Just so everyone knows, most of my funds are tethered right now, are not in moving with the market. They're in US dollar or tether, and I'm waiting to see, because I also am following that wisdom that I believe that there might be another big move downward, and I want to take advantage of it from a buying opportunity. So that's sort of what my perspective is I'm looking to buy at those levels, and I'm curious what you're looking at as far as indicators of those levels. So I'll turn it over to you now.
Well, one key thing from bear markets die on pessimism. Generally, you need extreme lack of faith, almost the exact opposite. How did we end that bull market? It died on extreme optimism. So
Correct.
I see the optimism, and of course, it's one thing you have to do as a strategist. You try to always put it down quantitative and put it into data, but you have to try to always measure psychology, and that's just listening to people like you and your guests 24/7, as much as possible, and reading. And my sense is it's very similar to what we had back in November. Everybody said, "Oh, it's going to bottom," and then the more professional guys like me come out and say, "Sorry, but that's not usually how things work." So one of the first things I can show you, I think, is what I mentioned, is this thing on Bitcoin shorts. So let me just share my screen with you, and we're good. Screen one, you should see that. Boom, right now. You got that?
Yes, sir.
So I'm just clipping through some things I published on the terminal. This is the thing I just put, I think it was about a week ago, and I'm going to maximize this chart so you can see it. And what you see in that white line, where I have a little circle, it's a little bit dated a week, but it hasn't changed much, is this is the level of shorts. See that peak? That's the highest level of shorts ever. Coincide with the bottom in Bitcoin. That's what you want to see. Now, the measure of shorts I get from TradingView, and I use CBOE and CME futures. So I update it only weekly because those are weekly. That's weekly data, and I'm going for everything I can. That's one thing about Bloomberg. We're going to get a lot more data, but it's taken us years to really find proper providers because they're so dicey. So this is what I use now.
Do you ever look at exchanges like BitMEX, which
Yeah.
is a hugely highly trafficked options and derivatives market for Bitcoin?
And I'm a former options trader, so to me that's right up my alley. Anything I can find so much good value-added information in options and predictable markets, but I use Trading Views number because I hear it's somewhat disseminated and partly because it's worked well. Because I understand it uses a broad swath of the market. So the key thing for me is the indication we had back in when the shorts reached their low in November. We put that out, and that was right before the collapse. We're lower than that now. And here we are. We've had a similar consolidation. Now, life in indicators are not always that simple, but I look at it as dangerously low level shorts if you're bullish. If you're bullish, you want to see things like this, way in the high. I mean, for trading, and that's another thing I need to clarify, is to me, this is a wonderful trading environment. I look at it as a trader. And if I'm a trader, you mentioned I'm a former options trader, I'd be looking at, I would be looking at put strategies because we've had a bounce and markets tell me you got to be careful.
Yeah, the trading environment, unfortunately for a lot of U.S. customers, you're not having access to the perpetual swaps like you do on BitMEX and stuff. But obviously, if you have the bankroll and you can afford the price of entry on CME and CBOE, and you're confident in the direction, go for it. But yeah, I think that's the most salient point here is the market is not set up for a huge growth moment right now. It's actually set up for a hugely bearish movement right now. And I'm not speaking on personal, this is not my personal knowledge, guys. I'm here reflecting expert opinions to you guys. I'm speaking to FUD Nation now. So what else are you looking at, Mike, that would give you this indication that we might have another move downward? And of course, if you guys are big believers in Bitcoin, big believers in cryptocurrency, which I'm sure you are, don't look at this as the most negative, horrible thing in the world. You can see this as an opportunity as well. So it's just about getting good information into your hands.
Well, that's what it is. And I, as full of respect as a strategist, is sometimes when conversations start with, "Hey, Mike, you idiot, you did this wrong." Fine, I get it. And oftentimes we can expect that people you take my call and do the opposite, and I've done that myself. So. And I just want to learn from that. So if that's the case, if people are making money from doing the opposite, I suggest I get it. But the key thing, primary, most robust indicator, and that's what I always looking for, robust correlation, has been this measure of U.S. dollar transaction value from blockchain.com. Now that's somewhat filtered, but I don't really care so much what it is as long as it works. It has a good history and it's robust. And that's what I'm showing you on the chart now. Is in white, you see that's just the 30-day average of transactions, and it's at the same level as when Bitcoin was last around 2,400. But I want to show you something that's significant about this is how you test this. And that's one thing a strategist will always do. I can play with this and make it look good look at this. This is just auto scaling. Oh man, look at how that is. That's just from the short-term period. And then you have to go back. What did it do in the past? What I really find significant is you go back in the past a little bit is the last time we had a bottom, this measure broke above volume. Although it's a 30-day measure, which means it's lagging, broke above the previous period's high, and then prices followed. And then we had this, in terms of auto scaling, this period of volume just continuing to trend higher, and dips in Bitcoin, and dips in the price, and it's telling you, all right, it's speculation, I get it, doesn't matter, but that's what drives markets.
So just to recap, what are the two what are the two indicators that you're comparing there in the orange and the white?
In the bright white is just the 30-day average of Bitcoin US dollar transaction value from blockchain.com. Now, the reason I use that is because I beta test tons of different data, and whatever has the best fit. You can see on the chart has the best fit. And then orange is just the price of Bitcoin. It's all log normal, so because it's so hard. But I like to auto scale and test it over time. See how close the relationship is there, and you go back even further. And as much as we have relevant data.
I mean, it's visually striking. You can see the correlation visually pretty easily there.
And the reason I say that is if we get time, I want to show you if you do that with addresses used, it's not really as robust. Although that was a key indicator we used last year to stay bearish. If you really dig into it, as a strategist, this is the kind of, I guess I'm showing you off some of my tricks. You have to be as defensible as possible. And this, to me, is the most defensible. Anyway, I scale it. It's not looking good for Bitcoin. Now, things could change. Maybe people are just buying it and they're never going to hold it, sell it again. It's like gold becoming digital gold. And that is what I'm hoping at some point is going to happen, potentially this year.
Yeah, and I think that's a salient point too about addresses used as my good friend Eric Crown might say the retail investors are a drop of water in the ocean, and one or two of these Bitcoin addresses can move such significant volume and can actually drive price in such a significant way that maybe that's not the best indicator. But we're seeing volume here as you're saying, back testing it is what allows you to get the data to be defensible. So are there any other defensible indicators that you're looking at that would keep you bearish right now?
Yeah, that's the key one. I have, we just go through my chart here. Let's go back to addresses used. I'll show you a chart on that, and I'll show you how it's different when you scale it. It was kind of what I was talking. So same thing here, addresses used, it's a 30-day average of the data.
Can you maximize that chart for us as much as possible?
Yeah, there, how's that? Does that work?
There you go, that's great.
Okay. And the good news is they've been picking up. Now, I've heard a commentary from someone on CNBC saying lately how addresses are picking up, and that's good, and we all know what that means. Mm-hmm. Unfortunately, when it hits CNBC, you're supposed to do the opposite. Now, as a trader, especially back in the pits in the 80s, it's true. And sometimes even with Bloomberg, when you see a journalist headline, sometimes as a trader, sometimes it's an indication to do the opposite, oftentimes. But CNBC has just been that case. So this has been a good, robust indicator for me last year. Peaked down, was hovering well below Bitcoin. But if you continue to scale back, it shows you a little different picture, which I was somewhat impressed with. And I have to change this to log normal a little bit on Bitcoin to show that the relationship. But if you go back, addresses used have been really strong forever. But then I look at it as, okay, well, this is the nascent stage of the market. Bitcoin got expensive, but addresses used, the trend was clearly strong, and it was kind of lagging. The only time it's really plunged was last year, and that's one thing I was pointing out is we've never really had a good dip in addresses used of significance until we did last year. But now it's starting to trickle higher. Unfortunately, it's still below the lows from 2017. But it's heading the right way. It's getting there. That's my point. We're getting there.
So do you think, and maybe this is more of a fundamentals question than a data-driven question, but do you think there is such a thing as fundamental news that can shift this market? Given the nascent nature of the space, we're seeing the chart say one thing, but what happens with an ETF? Like, can we talk a little bit about an ETF and what you think might be the effect of an ETF?
Yes, depending on what kind it is if it's first of all positive, of course. It's just quantifying how positive would be is a little more difficult. Definitely, because it does to me what ETFs did for gold. It just made it easier for the average person to really buy it and hold it rather than just have the space dominated by speculators. So that's a key thing you have to measure too. So for instance, today, in the markets, in broad markets, we had a bit of data on unemployment. Now, what I do is oftentimes I learn from my strategies. I'll use indication where markets are going with some of these indicators, and then I look at events as catalysts, either to disagree with my outlook or to agree with it. Like today, it went with what we were pointing out is that we had massive jump higher in job cuts, and that showed up in unemployment. So that's a little bit, but that's the way I look at, yes, something I can't predict like fundamental data, sure. But it's got to be somewhat significant. In the meantime, it's got to overwhelm these pretty substantial trends.
Yeah, and you'd think that major nations buying into the currency would or stockpiling it as you would hear in the news would cause these things, and it's just a question of where that bar is, how significant the news is, and how real it actually is to drive that price up. I also kind of find it funny that the whole Bitcoin community wants an ETF when kind of the underlying idea of Bitcoin is decentralization, and inevitably if we get an ETF, we're going to get the biggest. It doesn't matter how big the holdings everyone has are. They're eventually going to come to occupy a big portion of the currency supply and probably arguably create some levels of centralization of Bitcoin holdings. So it's an interesting moment that we find ourselves in. And yeah, time will tell how this whole movement will shake out. But what are we looking at right now?
Well, just as I transition to that concept of Bitcoin ETF,
can we maximize these charts as we do this as well? You did a great job on the last one.
I'm doing that. It's probably going to happen. My ETF team still thinks probably unlikely this year, but to me, that's the next step for Bitcoin to be like gold. As far as transactions, come on, it's got to be stable, and that's one thing that like with this Binance coin, it's just not stable. It's really speculative. What you look at here is very something simpler that you've probably never seen. It's just a simple 1 month, 1 quarter change in Bitcoin, and I'm pointing out how typically volatility in Bitcoin is declining. And the reason I point it out is all we've done in Bitcoin so far is retrace Q4 2017. That quarter was the massive parabolic one that will go down in history as the bubble. All we've done so far in the entire crypto space, Bloomberg Galaxy Crypto Index, most cryptos, notably Bitcoin, is we just retrace that rally. Is it over? And my indications are no. So what you see here is just the 1 quarter change. Typically when you have a massive spike, we had the 2 in 2013, and we had the final one in 2013. It was up almost 500% in 1 quarter, boom. And then you spent a few years hanging out at quarterly changes that are unchanged. We need to do that. So far, we've had, and see that the trend line's down for a reason. It's pointed out that's where volatility is going. That's migration to digital gold. That's migration to a proper currency. And don't ever expect these kind of things again. Maybe you get them in the short term, but you need to see these type of moves go down and down and down, and volatility continue to decline. And guess what? We have a store value, proper currency that's digital gold. It's still far from it, but the key thing I point out here is we had basically a 2-year consolidation period. You have to extrapolate forward with what's happening with maturity. This 2-year period should be closer to 3 years now, meaning we stuck in doing nothing, going lower. You got to get to maximum loss of faith, typically, for these kind of things to bottom. And again, maybe I'm off. I could be wrong, but that's usually how these maturing markets work. And this one to me is classic because of, it's just, we're talking about it. They see me, everybody's involved, and a lot of people are involved. The more the professional types now, and their job is going to put some adult supervision on it, and of course, regulation.
Yeah, I think that's very interesting. And obviously, we've all seen those, projected Bitcoin curves of the price sort of, the parabolic run up and then essentially the flat line over the course of 10, 20, 30 years. We can expect that Bitcoin will be that stable coin that everybody wants, or more or less, kind of like the fluctuations that you might see in any asset, a few percent, and that's really what we would need for it to be a currency, for it to be a medium of exchange. But there is still that belief, that hope, that excitement that Bitcoin, if it does become quote digital gold, and people do realize that as they've done with almost every other part of their lives, they value the digital part of their lives as much as the physical part of their lives. To me, there's an argument there that we do start to see the gold market cap, and if you do that math, it's a rough math, napkin math, you get about 100x from here. So it's an interesting proposition where we could see it flatline at about 100x from here. That's certainly what the optimist would like to think. I'm not asking you to certify that statement, but
well, you gave me an assignment, so maybe I can work on that one.
Yeah, work on that one. I'd love to know, because I do believe that I didn't want to push back on you last time, but I do believe that the argument that that there are 2,000 Bitcoins is incorrect. I think that there is one Bitcoin, and I would point not towards the fact that it's a cryptocurrency, but towards the fact of the mining network and the infrastructure behind Bitcoin, and how that is distinct and unique from the other coins. But that is for another day. We could move to that on another day.
Yeah. Well, I'd look at it as 2,000 competitors, not actually, like for gold, there's silver, platinum, palladium, and that's it in precious metals.
Yeah,
but that's another. We can spend a lot of time on that one.
that would be a fun one. Maybe for the next one, we'll compare physical gold to digital gold. We'll see how they stack up. Right. So what do you think of news events? Like I go online today and I see Dr. Doom, Nouriel Roubini calling Bitcoin the mother and father of all bubbles. How would you define, a bubble? Does Bitcoin fit the definition of a bubble? Or does it, how does it fit that definition? How does it not fit that definition from a sort of unemotional, quantitative standpoint? Are we in a bubble right now, or are we already, has the bubble burst, and are we now potentially building towards hopefully sustainable growth? What is your feeling towards the classification of Bitcoin as a bubble?
Yes, clearly, it might be one of the most historic ones in our lifetimes. And just to define that real quick, a lot of people who did really well in Bitcoin, made 100x, don't underestimate the fact that typically your average person in the history of the world is lucky to get that once in their lifetime, once. So, and that's one thing that, coming from the trading pits, you see that a lot. And there's one thing you learn is thank you and move on, knowing when to get out. So it's a classic implosion of the bubble. But we've seen these other. Obviously, everybody's using the example of the internet bubble, and we just haven't had anywhere near the culling, I think, yet. And maybe these coins don't disappear, but they really need to get hammered. Like I said, you typically need a maximum loss of faith. I mean, we had in Amazon from 100 down to 5.
Mm-hmm.
And look where it is now. We had it in NASDAQ. Typically it happens. But this was most extreme, and it was global. And it remains global. But the unique thing about it is it's oxymoronic, meaning you look at a lot of these, like CoinMarketCap.com, they call them cryptocurrencies. They are not currencies.
Correct.
That's what I look at it. A currency is tether. I hate to say it, but unfortunately, the primary purpose of tether, it's number two things. Unfortunately, it's tethered to dollar, which is bad in cryptos, and the primary purpose of tether is one thing, trading other cryptos. But to me, that's what we're getting to. As far as cryptocurrencies, that means volatility has to decline. The key thing, volatility they have to become stable. In the meantime, I'm analyzing speculative digital assets that are in an imploding bubble, is what I see. And I'm trying to but I look at it, if I was a trader, well, awesome. I know a lot of ex-traders. That's what they just say. Ex-traders, like guys like me who got sick of trading nothing and volatility and treasury options, have gone to this space and they're just delighted.
Yeah, Crown is an ex-market maker at ARCA New York Stock Exchange, and he is euphoric seeing these price shifts, and agrees with you a lot on price action as well. I think it's definitely an interesting thing. You're definitely going to get lit up in the comments for the tether praising. That's something we're going to have to live with. But at the same time, I think you bring up a salient point, which is that Bitcoin is a currency. And it wants to become a currency in a variety of ways, and then there are other tokens, other coins in the space, but they're not designed as currencies so much, even if they store value and can send value. And I think that's a proper distinction, which I've been wanting. Maybe I'll do some follow-up content on that, but I think that's a great point. One of the reasons why I also think that there is not 2,000 competitors, but we can get to that another time.
But that's what I want to hear is your opinions, and particularly the most valued opinions to me are the ones that disagree with mine, because that's the only way we're going to really get better in knowledge, as long as we're gentlemen about it, right?
So let's back off now. Talk a little bit about the economy in general. Let's talk about some traditional market stuff. What's going on out there in the real world? I haven't peeked my head out in a while. Can you give me an update and let me know? I keep seeing that the Dow's, it's up, it's down, it's bleeding, it's booming. What are we looking at as far as traditional securities markets, traditional commodities markets, and of course the $64,000 question will be, how does that connect to our world of magic internet money?
I think I have two relevant comments. This is something I published early this morning in U.S. time, and what it is that there's things. It's a measure of job cuts in the U.S., and it was significant because it came out yesterday and it predicted what was happening today with this unemployment number, which is a bit weak. What you see in the white line, that's just a 12-month average of challenger U.S. job cuts, a percentage.
Please kick those charts up for me, Mike.
Yeah, it's the highest in a decade. That kicked in yesterday. So all we saw today was a follow-up in unemployment. Mm-hmm. So it's bad. It's a bad indication, but not so bad. The last time we were this high, unemployment was 7%. Now it's 4%.
Gotcha.
So we got that going. But indications to me are markets are telling me that be cautious. And one thing I wanted to show you is cryptocurrencies, I think, are prime indicator in that space. And that's what I wanted to show you right now is, I'll make this, I'll maximize in a second. The headline's key. Mean reverting leader, Bitcoin points lower. And that's the thing that we pointed out last year is the Bitcoin pump in 2017 and then dump in 2018 coincide with the similar in the stock market. Mm-hmm. Is it just spurious? I think not. I think it's Bitcoin and cryptos are an example of speculation in the market, people looking for return. Now it's turned down, and guess what? Stock market's turned down too. A lot of things have turned down. Crude oil's turned down. So I think it's part of the game, although most people say it's not significant in terms of assets, but that's where I bring in the psychology. So the next leg lower in Bitcoin, which I'm fearful, I think it will have companions in things like U.S. stock market, crude oil, bond yields. I hope not. But
so you're seeing increasing evidence of correlations here.
Yeah. Well, what you see in the white line, you see that is just a simple. What average am I using? I'm using a 12-month average of Bitcoin, it's turned. See, that's the key thing as a trader. You think, okay, you follow trends. You buy dips in bull markets, you sell rallies in bear markets. What's Bitcoin? It's a bear market. So you keep the discipline until proven wrong. The key thing is everything turned last year.
Mm-hmm.
Bond yields, stock market, crude oil, copper, you name it. So is it spurious? But my point is until they have significant indications that turning trend, which is now pointing down, is over, I'll stick with the trend, which remains down.
Sorry, I got a phone call. Apologize.
No, so that's it. That's the way I see the macro. I use markets as my indicators, and what we saw recently with unemployment is kind of confirming that the world is slowing down, and the U.S. is not isolated.
Well, I love that, and I always love to take a more holistic view of the markets, and I think everybody in this market is desperate to try to get some perspective, and so I think you do a really good job at bringing that perspective in, and we thank you for that. And yeah, I mean, would you classify the Dow and the stock market as turned? Because I think that's one of the big questions that everyone's trying to understand right now are the traditional markets turning down? Are they just having a hiccup? Is the bullishness that we've experienced since 2009 or 10, is that going to just keep on going? Like, what are we looking at here? Because I think everyone in Bitcoin and cryptocurrency land likes to shout, the collapse of the traditional system is upon us. Long live Bitcoin. And then we'll get, these massive buybacks and pumps and quantitative easing, and all of a sudden we're back on a bull market, or at least it seems that way.
Well, I'm not nowhere near that extreme, but I'm definitely an advocate of diversified portfolios, and Bitcoin, I think, is becoming part of that. Be careful of the difference between diversification and speculation. And, it's okay. I'm a former speculator, but I wanted to just open one thing here. I think what you see in white is Bitcoin, and what you see in orange is the inverse of the annual measure of the VIX, the stock market volatility index. To me, it's not spurious that they both volatility bottomed, in this case peaked, as on the chart. We looked at this one before. At the same time, those trends remain clearly intact. Volatility is going up in the stock market, and prices are going down in Bitcoin. Give me a good reason to end those trends. I'm not smart enough to figure out when they're going to end, but I'm smart enough to say that's a trend. Trade accordingly, or position yourself accordingly.
So just to recap here, and this is a great chart, which I don't think I've ever seen presented by anyone else, which is the volatility in the traditional stock market mixed with the price of Bitcoin in the white. And that is quite a shocking chart to look at. And really, if anything was going to spell out correlation, that would right there. As Eric Crown would say, the trend is your friend until the end. Yeah. And certainly we see a trend right now. So until we see, does it look like we're seeing a bottoming in the volatility on the stock market chart?
I doubt it. Well, that's the key thing for the chart. It's in inverse, and you look at the historic mean. Here's the number one rule in options trading: volatility is always mean reverting. Always. Just a question how far. So the historic mean for the VIX is 19, and the 250-day average right now is around 16. Boom. Okay, maybe we'll get lucky. Maybe it's different this time, and maybe I won't live to see it, but it's going to happen. In the meantime, I think we've just seen a blip. Volatility's dipped in the short term and should continue to head towards that 19 mean. The question is, does it do what it did in 2008 and 9? We hope not. That's when it reached all-time highs.
Well, I think we've got a lot to digest here. What are you looking at? What's the most important chart? No caveats here, no specifics. Could be any market, any chart whatsoever. What do you think is the most important chart in all of the financial world right now?
The S&P 500.
The S&P 500.
And I'll show you that. Yeah, because it's the bottom line. And what you see now is it's just made a pretty significant outside week down. As it's one thing I love when we have other technicians. We all kind of say the same thing. Outside week down is very bearish, but it's some significant resistance at 2,800. And the reason I say that is because there's no more powerful force in the world when it goes down a lot, and that's the U.S. stock market, because it drives everything. It drives interest rates, it drives the Fed, it drives every decision people made, it drives the economy. Or it's a leading indicator. So I'm hoping it doesn't go down a lot, but history says its risks is it should continue to. This V bottom you can see in the chart is as a trader, you look at that as high suspicion. Markets typically don't make V bottoms. Like that's why you look at Bitcoin. You typically have to make W. You got to have maximum pain bottom. So I'm really worried it's going to continue when it started Q4 last year, and that is go down. I mean, I'm much more of a fear, and I overlay that in the chart where I have it overlaid with crude oil, a commodity strategist, and crude oil showing what I would say divergent weakness, but I don't think our audience cares about crude oil.
Well, thank you so much. Let's there's so much that we went over today. I think it's been a phenomenal episode. Thank you so much for your time. As usual, your expertise and your perspective. I'm sorry to everyone who, if this is a bubble burst, no pun intended, but at the same time, I think it's important to try to get outside of the crypto echo chamber and to try to get good information into your hands so that you can be prepared and potentially even anticipate some drops where, I'm sure everyone would have loved to know that things were going to really dive from 20K and would have loved to sell that top and maybe even buy these bottoms. So at any rate, what do we could have some final send-off words here. And once again, just thank you.
Well, thank you. I appreciate being on your program, and I really appreciate the education you provide. And I got a sense for that. I was in Florida last week, and I had to give a presentation, not on crypto, it was on the overall market view. And a gentleman afterwards walked up to me and said, "Hey, I saw you at FUD TV." I'm like, "Hey, man, that was cool." That was kind of neat. He didn't see me on Bloomberg TV. He saw me on FUD TV, so that was kind of neat.
There you go, FUD TV. Watch out, Bloomberg. Thank you so much, Mike. He'll be back soon.
Right. Thank you.
Well, I hope you guys enjoyed this episode. I know I certainly did. A big thank you over to Mike from Bloomberg. We look forward to having him back on the show. Let me know, what did you guys think about this episode? Leave me a comment in the comment section below. Do you agree with Mike? Do you disagree with Mike? Let's hear your thoughts. If you're not subscribed to FUD TV, I encourage you to hit that sub button and click that bell notification. That way you're made aware whenever we put out content like this. As usual, I'm Elio Trades. You're watching FUD TV, and I will see you very soon on the next episode.